Let's address what's happening in the crude markets because that's where all the action seems to be. We've got Peter McGuire joining in on the show right now to talk about his thoughts here. Peter, hi. Great to have you on the show today. Thanks for joining in. Just wanted to understand, I mean, we're back closing in on the $100 per barrel mark already. What's been causing this?
Well, Aisha, I tell you what, a couple of things. It's been exciting from a trading perspective really since June or July. It's been one-way traffic, and I think that that's really been that explosive move to the upside has been enjoyed by traders. When we roll into also the Russia and the Saudi Arabia situation as far as production cuts, we take on board what can happen in the next matter of weeks, and I think that's going to be higher prices from here. So that's the storyline over the last couple of months, and yeah, strap yourself in because it seems to be onward and upward.
Okay, point taken. So the traders are definitely having a field day, Peter. But what's the expectation now beyond 100? Very likely. And if we do hit that mark, are we going to sustain above 100 for long?
Well, Ivana, I don't know how far much further it can go. You know, everyone was saying 95 and keep an eye on it. Well, we're at 97.5 now. So, you know, we're knocking on the door of 100. If it's momentum driven, and it seems to be very, very solid over the last, 2 to 3 weeks as far as trading, then, you just don't get in the way of a bull market. So probably there's more upside capacity. Let's have a chat at 105 or 110, and then we'll get a real indication. But many of the hedge funds are saying that it's 110 to 120 by Christmas. So it's not a good sign for consumers anywhere.
Not. And the other thing I also wanted to talk about was, while we're talking about Saudi, Russia extending the production cuts, by no way can one really deduce that this escalation in crude prices is coming because, world growth and demand is actually on an uptick, right? I mean, it's in that case, it's a special situation trigger.
Absolutely, and that's the other side of it, Aisha. As far as it's a supply demand, it's a knife edge. So you take that out of it, and we understand from a consumption standing, it's very, very weak as far as growth and the potential for growth across the globe, with inflation and all of those high rates and the impact that's having to not only domestic economies, but the export market. So, we look at German manufacturing, we look at the NASDAQ or the S&P and how they derive majority of their earnings offshore. They need strong markets. Now, this is the other side. So, at the moment, the producers are holding the ace card, and we're just sitting here going, well, how much further or how much more momentum is there in the short to medium term?
Okay, Peter, on that note, we let you go. Appreciate you making time and speaking with us.